Hello Maverick Traders and welcome to today's currency recap. It is February 16th. Wow, a lot going on. We finally got our inflationary data and it was exciting. You know, the inflationary data came in hot, equities sold off as a result, and the dollar found a bid. What's interesting, however, is that, on a whole, cryptocurrencies have held their own. So, whether that means that cryptos are just lagging other risk assets right now, or whether the fact that crypto is able to more or less hold support today means we'll see a rebound in risk appetite tomorrow, it has yet to be seen. But that's a very interesting question to ponder, I think, right now. It also goes to show you how seriously we must take cryptocurrency as an asset class nowadays. That definitely wasn't the case just a few years ago. But anyway, moving into market analysis here. So the S&P closing on its lows, very close to taking out former support, and we're hugging the moving average right now. So if we break below that 20-period moving average, it's really interesting. That could open the door to a bigger decline down to 4,000 or beyond. So we'll have to stay tuned over the next few days to see what direction the market takes. But right now we're still clinging on to support, even if it is barely clinging on to support. So I'm very interested to see what happens in tomorrow's trading session once the market has had time to digest the latest CPI numbers. Okay, so very similar story in VT, except we've broken below the 20-period moving average, but I don't really have too much to add here. We'll just have to see whether or not we can climb back above that moving average tomorrow, or if we're going to start a deeper decline to around 90 bucks, which is where the 50-period moving average comes in. Over in cryptos, so we did get that pullback I was calling for. It was a fairly steep pullback, and then we busted out higher. Put up a YouTube video on the subject, actually, saying I am pretty confident Bitcoin's going to crack 25,000, and it has. What's going to happen next, however? Well, I wish I had good news. I see potential for one more pop higher, which I think will be a false breakout and suck in a lot of buyers before crypto reverses violently. But my personal prediction here is that I think we're going to see a vicious sell-off in crypto over the next few weeks. Just my personal prediction. We'll see what happens. Okay, so I'm going to stick with the previous rating here, +1. We're above both moving averages, but the slope is starting to look a little dicey here. So if that slope gives up the ghost, so to speak, then that would really open the door to a broader decline in equities. In terms of the news calendar, well, it's pretty quiet. It's pretty quiet. This is an outdated news calendar. I just realized that, so apologies about that. But tomorrow, there isn't really any high impact news that we have to be aware of. So like I said, it'll be very interesting to see how the market digests what went on. Okay, so moving on now to currency analysis. So like I said, crypto held its own with the exception of Bitcoin Cash. But as you can see, Bitcoin is at recording was still hanging on to its day's gains, as was Ethereum. But the two laggards really were Bitcoin Cash and Litecoin. But it's not like we saw a vicious sell-off in crypto the same way that we saw equities really give up any hope of staging a comeback rally this morning. On the fiat currency side, the yen and the dollar were the clear outperformers. The Swiss franc and the euro were kind of middle of the pack, I suppose, and then everything else underperformed. So the pound, the loonie, the Aussie, and the Kiwi all underperformed, with the Canadian dollar being the biggest loser at time of recording. Very interesting, by the way. So on the velocity side of things, I'm really liking the dollar and the yen here, and I particularly like pairing the dollar and the yen against the commodity currencies and the pound. And we're gonna take a look right now at some possible trades, looking at exactly those currency pairs. So first up, currency baskets, I should say. First up, we've got the yen in focus here. So you can see we are starting to see a bottom here in the relative strength index, even some signs of bullish divergence. At the same time, we've been trading in this short-term descending wedge, which is a reversal formation. We've broken out the upper trend line of that wedge. And if we take out the February 14th high, which in the basket comes in at 0.000086, then I think that does open the door for the yen to trade higher, broadly speaking. So what would be my upside targets for this wedge be? Well, the first upside target would be the high from Monday of Feb 13th, and then the second target would be much higher up, which is the high from February 10th, Friday, February 10th, right? So quite some interesting bullish potential in the yen. And of course, if we don't take out the Feb 14th level that I just pointed out here, then we're not gonna go on to meet any of those other upside targets. So that really would be my trigger, breaking above that Feb 14th level. And then that opens the door to those upside targets I mentioned. Over in the dollar just continues to march on. I thought we would get a steeper pullback, a little bit of a steeper pullback in the dollar basket, maybe test this prior support level of 118, but we haven't. We've just gone up and we're currently at 120, almost at 121. So the upside target, I think that's very obvious in the dollar, will be this swing point from Friday, January 6th. Right now, on a percentage basis in the basket, that is still about 1.5% away. But I'd be very excited to see the dollar try and meet that objective. I think that'd be very exciting from a trading standpoint. And then taking a look at the pound, to zoom out a little bit just for some additional context here. We got a sharp impulsive looking decline followed by a corrective rally. I'm expecting a break below support here. And it's possible we will even trade down to this prior support level. We haven't reached that level since September. Okay, so I'd be very happy to see a bit more of a steeper pullback here in the pound. The currency overall looks quite weak, especially relative, I would say, to the dollar right now. But yeah, we'll have to see. I wouldn't be looking at a crossplay in the pound myself. I'd just be looking at cable. And then the commodity currencies in focus. So dollar Canada is kind of at a make or break situation, right? We have this resistance level right here, that we're trading into. And if we can't break through that resistance level, then I expect a move all the way back down to the prior lows. And we haven't seen those levels since mid-January. So definitely some bearish potential in the Canadian dollar there. On the Australian dollar side, we've broken this trend line, but we haven't really dropped below it significantly, but we also haven't really climbed back above that trend line. So I think it's kind of a do or die situation in the Aussie as well. If we break below the support box, then I think, the next target will be the low from January 19th. Very interesting that that's the same low that I'm targeting in the Canadian dollar. If we take that out, I think that then opens the door to a test of the December low, which is down at 75.45. Okay, so on the other hand, if we can climb back above this trend line, then I think retesting the January high is a no-brainer, right? So that comes in around 79.65, 79.66 or so. So I think the downside potential is definitely more exciting from a risk-reward perspective. And I'm hoping that's what happens, but you don't trade based on hope. Ultimately, we have to let the charts show the way. So those are the top opportunities I'm looking at on both short and intermediate terms. Now, in conclusion, let's see if the market sticks to a risk-off view in tomorrow's trading. I really do agree with this, with our emphasis right now on trading less and focus on the currency in play, and of course, focus on proper position sizing as always. We have no more classes for the week, so that's it for me, and I look forward to speaking with all of you next Thursday. Take care, everyone. Happy trading.